So no change from the Reserve Bank today, leaving the cash rate unchanged at 3%. The Reserve Bank does retain an easing bias, however. The inflation outlook certainly does provide scope for the Reserve Bank to ease monetary policy further if it deems that it's required. They have eased monetary policy quite aggressively over the last 18 months or so, and they are actually quite happy just to see the effects of that prior monetary policy easing on the effects of the interest rate sensitive sectors of the economy before deciding whether any further monetary policy easing is required. They do acknowledge that the peak in the mining investment boom is drawing near, and they do definitely want to see the interest rate sensitive sectors of the economy starting to pick up some of that slack. The Reserve Bank does acknowledge that the external environment has stabilised. We do have Europe still in recession, which isn't great obviously, but the US economic growth is starting to show signs of moderate growth. We do have Chinese economic growth stabilising at quite an elevated level. So at the moment the Reserve Bank does see the external environment as being quite stable. Certainly no lack of potential issues out there at the moment, particularly through Europe. If we have a look, Italian elections still basically in a stalemate position, unable to form government. We've got German elections. It may also provide a bit of a roadblock to any sort of assistance that is required to other countries. So more recently we did see that in Cyprus. Some of the, basically the Cyprus banking system needs to be recapitalised, and they went through some pretty aggressive measures there to get the system recapitalised there. Domestically, the Reserve Bank does see the housing market and a few other things starting to show positive signs, which is what you'd expect given the size of the monetary policy easing to date. Also seeing consumer confidence starting to pick up, which, given the size of the interest rate cuts and also what's happened in the equity markets more recently, it's not surprising to see consumer confidence starting to pick up. That being said, the elevated level of the Australian dollar does remain a concern for the Reserve Bank. Given that we have seen a decline in commodity prices, the Reserve Bank does see the currency as being somewhat more elevated than what they would otherwise expect. We do have business conditions still on the weak side as well, particularly if you look at the NAB Business Conditions Survey, still in negative territory. Also, we've had credit growth, which has been quite tepid more recently. So enough at the moment to suggest that the Reserve Bank's probably on hold in the nearer term. We do, however, expect the Reserve Bank to ease monetary policy further in the second half of 2013.